Hello and welcome. Today is Friday, the second day of September 2016, and my name is Derek. Welcome. Let's take a look at silver on the daily and weekly charts. As last week I concluded with this green, bad-looking candle, which should have brought us down towards this point here, but that didn't happen. And when you have situations where something is in a high probability to go up or down and it doesn't do such, then you can get some decent opposite directional moves, which could have been the start of today's session, up 56 cents or 3%, because Monday was a green candle up, and I said if any candle look of this type of nature were to come into play, I would quickly change my direction of trend that I would see this at, and see this as the probable failed breakdown, fast move to the upside. So it does look as if that's coming into play. It's barely gotten above this 18 average of closes, and highs, I should say, but it has. Key thing though, as far as this reversal of trend, this is the established support level. So if this does top and go lower, then a break of this point here, and I would make this bearish on the chart, but I really don't think that's going to be coming into play. That doesn't mean it can't go sideways or go neutral for a while. Maybe even create a higher range. This week the range was like 30-40 cents, from about 18.5 to about like 19, so maybe a 50-cent range. Maybe a range from 19 to 20 might be something that could play, but it could also keep going up towards the upside, especially when we look at this on the weekly chart, because the significant Fibonacci point obviously hit well as the 18 average band, at least very similar to this pullback here. If it is similar, of course, this point here is similar to this point in here, and it's skyrocketed from this point here, and it's done it in this pattern several times, where if this does keep going up towards into the 20s, that it could go well into the 22s before you'd have another significant resistance point that has not been seen for quite some time. Now, why 22 and change? Well, I'm using Fibonacci from the these lows in here, which is 1362, and the $50 highs from 2011. So the first point, which is the 15.4%, really a small level, has gotten by. And this one here, 23.6, it's small as well too, but at 38.2% is 22.5 ballpark area. So that's what I'd be looking for as a key resistance point. But even the pattern for what you'd see, where you have a big leg room up, correct sideways, and then go down for, well, these candles in here, but follow it up with a larger size green candle for the next one within, again, this 18 average. That to me looks pretty good for future momentum moving forward. This will be it for the video. Thank you for tuning in, and I'll talk to you next time. Bye-bye.